Welcome back to Investor Insight. I'm David. Today we're diving into a fundamental question that every investor faces: real estate or stocks? Warren Buffett answers this directly, explaining why Berkshire Hathaway, his investment company, has focused almost exclusively on stocks rather than property, even when real estate was offering incredible bargains. His reasoning might surprise you. It's not about returns. It's about something much more practical. Let's watch.
Certainty. Do you still believe in being greedy when others are fearful, or the value investing facing new challenges in today's environment? Thank you.
Yeah. Well, in respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, you find out you're dealing with more than the equity holder. But there have been times when large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they were a lot easier to do. So Charlie did more real estate. Charlie enjoyed real estate transactions, and he actually did a fair number of them in the last 5 years of his life. But he was playing a game that, and it was an interesting game to him. But I think if you'd asked him to make a choice when he was 21, he had to either be in stocks exclusively the rest of his life or real estate the rest of his life, he would have chosen stocks in a second. There's just so much more opportunity, at least in the United States. There's so much more opportunity that presents itself in the security market than it does in real estate. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they've borrowed too much money against it. Maybe the population trends are against them. But to them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes. And the trades are complete when they're complete. In real estate, when you make a big deal with a distressed lender, when you sign the deal, then you go into another phase. I mean, then people start negotiating more things, and it's a whole different game, and a different type of person, to some extent, enjoys the game. We did a few real estate deals that came our way in 2008 and 2009, but the amount of time that they would take us compared to doing something intelligent and probably better in securities, there was just no comparison. I mean, in a real estate deal, every sentence is as important as a person, and in stocks, if somebody needs to sell 20,000 shares of Berkshire or something, and they call us and the price is right, it's done in 5 seconds, and it closes all the time. People who you certainly wouldn't want to have marry your daughter, or they behave well, actually, in stocks. Partly that's because they're probably having their wires or phones or whatever it is recorded as to what they've said and everything. but the completion rate for working on anything in stocks is, assuming you've got a meeting of the minds on prices, essentially 100%. In real estate, it just begins when you agree on deals, and then they take forever. So for a guy 94, it's not the most interesting thing to get involved in something where the negotiations could take years. we have the capability. There have been some huge failures in fact, if you go all the way back to Zeckendorf in the 1960s, he was going to change the world, and Century City out in California is a product of his. And if you go to Urus, if you go to, he was sitting on top of the world with the Urus buildings. And so people tend to get in trouble in that business. The banks usually don't want to recognize it, but that takes a long time to go through the bank processes. They just got through redoing the Musk loan that he did when he was buying it 3 years ago, the company that's now X. And, 3 years to work out a transaction that where you've got parties on both sides that aren't ready to act. We find it much better when people are just ready to pick up the phone, and you can do hundreds of millions of dollars worth of business in a day. I've been spoiled, but I like being spoiled, so we'll keep it that way. Okay, Becky.
Buffett doesn't sugarcoat this. He says, real estate is infinitely more difficult than stocks. And when Warren Buffett, someone who's been investing for over 7 decades, calls something infinitely more difficult, you need to pay attention. Let's break down exactly what he means. First, the operational complexity. Real estate is work, serious, exhausting work. Every single deal involves prolonged negotiations with multiple parties. You're not just talking to one seller, you're dealing with property owners, their families, banks, and often a chain of people who all have a say in the transaction. And here's where it gets even more complicated. When a property is in distress, which is often when the best deals appear, you're not negotiating with a motivated seller ready to close. You're navigating a bureaucratic maze of creditors and financial institutions, all with different interests and legal claims on the property. Buffett calls this the equity problem. It's not just buying a building, it's untangling a web of debt, liens, and competing interests. Now contrast that with stocks. Buffett gives us the perfect example, the New York Stock Exchange. You can move billions of dollars in 5 minutes. 5 minutes, completely anonymously. No negotiations, no committees, no waiting for signatures from multiple parties. You execute the trade, and it's done instantly. This is what Buffett means by scalability and efficiency. When you're managing the kind of capital Berkshire Hathaway manages, this difference isn't just convenient, it's essential. Real estate simply cannot match that speed and liquidity. But there's another layer here that many investors overlook. What happens after the deal closes? With real estate, signing the contract is just the beginning. Now you have a whole new job: property management, maintenance, dealing with tenants, navigating local regulations, handling repairs. It never ends. With stocks, once the transaction is complete, you're done. You own a piece of a high-quality business, and that business has professional management running it every single day. You don't get calls at 2 a.m. about broken pipes. You don't negotiate lease renewals. You simply own a fraction of a productive enterprise. Now, Buffett is fair here. He acknowledges that there have been historical moments, crisis periods, when massive amounts of real estate changed hands at bargain prices, fire sale prices. And yes, fortunes have been made in real estate during these moments. But here's his critical insight. Even during those real estate crises, stocks were usually even cheaper. This is the part that separates strategic thinking from opportunistic thinking. It's not about finding a good deal, it's about finding the best deal relative to other opportunities available at that exact moment. Think about this from a resource allocation perspective. You have limited capital, limited time, limited energy. Where do you deploy those resources for maximum efficiency? For Buffett, the answer has always been clear. Stocks offer better scalability, better liquidity, and far less operational burden. This is especially important for individual investors. You don't need to become a real estate expert. You don't need to master property law, understand local zoning regulations, or develop construction knowledge. You don't need to screen tenants or manage contractors. The stock market gives you immediate access to the best-run businesses in the world with complete liquidity and zero operational headaches. Buffett's describing real estate as a local, fragmented business that requires enormous physical and managerial effort. Stocks, on the other hand, allow you to own pieces of the world's greatest companies with a single click. No tenants, no mortgage disputes, no family conflicts over inherited property. This doesn't mean real estate can't make money. It absolutely can. But Buffett is making a different point entirely. He's talking about efficiency, about how you can best deploy capital at scale, about where your competitive advantage actually lies. For Berkshire Hathaway, managing a massive stock portfolio is far more efficient than managing a massive real estate empire. The infrastructure needed, the personnel required, the complexity involved, stocks win on every metric. So here's the question you need to ask yourself. Where can you deploy your capital most efficiently? Where do your skills give you the biggest advantage? What fits your life, your schedule, your capabilities? If you love real estate, understand local markets deeply, and enjoy the hands-on nature of property management, then real estate might be perfect for you. But if you want to own great businesses without the operational burden, if you value liquidity and simplicity, if you want to focus your time on analysis rather than management, then Buffett's logic is crystal clear. The best investment isn't always the one with the highest potential return. It's the one that fits your strategy, your resources, and your life. Thanks for watching Investor Insight. Subscribe for more deep dives into Warren Buffett's investment philosophy, and remember, choose the game where you have the best chance of winning.